firm ChrysCapital, with approximately $4 billion of assets under management, has investments across sectors including KIMS Hospitals, Eris Life Sciences, as well as NSC, with prior exits in heavyweights like Infi, HCL Tech, Axis Bank, and more. Sanjay Kukreja, partner and CIO at ChrysCapital, spoke about the outlook on India investments, potential for the healthcare delivery space, as well as his view on recent listings in the new age tech space. Listen in.
Fundamentally, the story is of backing growth in India, and backing some great entrepreneurs. And we've seen some great stories and winners over time because we've been in India now for 24 years. As you sort of recounted, lots of investments. We've just completed our 100th investment actually as a firm. And we've also seen 80 exits. So through cycles, a lot of experience, through the years. And really, if you just recall back and say, look, what is the, fundamental thesis has always been backing sort of great entrepreneurs and good businesses through cycles.
You spoke about multiple exits, and that has happened largely within IT, Cyient, HCL, Infosys, LTI, KPIT, Emphasis. I could go on. Just walk us through, what was the strategy in identifying these companies? How long ago was it? And, how did those investments really pan out for ChrysCap?
So, so first of all, ChrysCapital has always had a sector-specific approach. I think back in 2001, 2002, right from that point onwards, we've really had a focus on, organizing the firm even by sectors. So IT services was always a very strong focus area for us. And our teams are organized, our sectors were organized by that. So there was always a sector lead who was looking at IT services. I've covered it personally for many years myself, but others have too over the years. And what we were able to do with that is really lived experiences, right? Identify some of the better companies. We have had, almost a third of our capital through our, history of investments has gone into business services, the sector that you called out. And had a very, very strong successes in that, as you've recounted some of the names. But even within that, the strategy has changed quite a bit. I think we've done early stage deals like Emphasis and Spectrum Mind back in the day in 2002, 2003 timeframe when these businesses were scaling up dramatically, to later stage companies in 2007, 2008 like Infosys and HCL, which were more listed in nature, and we were taking advantage of market corrections post the global financial crisis, and maybe just prior to that as well, where we came in and said, look, some of these companies can continue to scale, and we're getting good, attractive valuation points, and that's when we made some of those investments. To 2012 onwards, where the strategy changed a lot towards moving towards US-India corridor investing. So we started investing in companies that maybe have a sort of a large portion of their value been driven by India, but the founders may have been based in the US, the companies may have been settled, have been run out of the US.
Majority of the investments have come in from the IT space. Can you walk us through what the outlook is here? Because it seems like a lot of the industry executives indicate that it is a bit cautiously optimistic. So what's the strategy while identifying now players within the IT space?
Yeah, so I think, look, obviously there are IT services businesses not, fully recession-proof, right? You are servicing Fortune 500 customers. I think, obviously Eurozone is already in recession. US likely to, get there at some point. At least a lot of talk around that. And so corporations are actively sort of, thinking through their budgets, and in such environments, I think, if you divide the businesses into run the business and change the business, the change the business side tends to get, pushed back, whereas run the business is more sort of, those investments still need to be made. So you pivot a little bit more towards run the business types of companies, and because they have a little bit more surety of growth in the next 4 or 5 years.
It seems that one sector that has been relatively unfazed, if you could, would be the hospital space. We've seen a lot of deal flow as well that's taken place. So pharmaceuticals as well as that entire space as a whole, the healthcare services, that's a space that you as a group as well have invested in. Kim's Hospitals, Eris Life Sciences, Mankind, etc. Do you think that we are likely to see a lot more focus on healthcare, especially post the pandemic, and therefore the sector as a space looks a lot more interesting?
I mean, pharma is actually, again, one of our core sectors that we've had focus on since 2003 onwards. We've had Sanjeev join us in 2004, who used to be president at Ranbaxy before that. So a lot of operating experience and led our, pharma investments for a long time. Today, another colleague runs it. We are, obviously very prolific investors, but what we've in pharma and healthcare, but what we've done more recently is actually broken up pharma and healthcare into two separate sectors, really reflecting what's really going on in the market today. There is, the domestic formulations market, which is really the pharmaceutical companies like Intas and Mankind, where we've been investors for the longest of times. These are fantastic businesses, generate very high return capital, very high gross margin, provide, also from a certainty around growth. I mean, they'll never be the companies that can grow 10x and like that, but there will always be steady Eddie growth in these companies as they provide a critical service to India to really get Western medicine, more integrated into society, right? So they're playing that critical role, and these companies are scaling up because of that, because there's still much more room for growth in these businesses. So that's been our, very sort of dominant theme that we've been investing in over the last 20 years.
What's the outlook when it comes to manufacturing as a space? Because, experts seem to allude to the fact that India is seeing a manufacturing renaissance of sorts, and here is where all the action will be. Do you believe that there's a lot of potential? Can you walk us through some of the investments that have been made within manufacturing?
So, we've been, obviously manufacturing in India is something that is has always been on the come, right? And it's been a sector that we've always been looking and tracking at, but has also not been a sector that has delivered historically and has, flattered to deceive. Having said that, I think a lot of action has happened in the last 5 years, whether it's from a policy perspective, whether it's a confluence of global events, playing out in a certain way, whether it's geopolitics and cost structures moving in a different way in China, etc., which have created opportunities for Indian entrepreneurs. I think specialty chemicals is one area that I'd call out where it's quite clearly visible the last 5 years, the kind of growth Indian companies have seen. It's a very strong sort of success case. At the same time, textiles was a great opportunity that Indian companies didn't capitalize on beyond a point. And you look at some of the companies in Vietnam and Bangladesh probably have taken, a lead over Indian companies in that sense, in that space. So it's been a little bit of a mixed bag. I think clearly today there's a lot of excitement in the space. When you talk to investment bankers, they're putting a lot of effort in covering here. I think, few of them have even said, look, investments in the space may go up 10x. So it's clearly an area you need to focus on. We are at ChrysCapital obviously evaluating this, constantly. And we would be very happy to see a vibrant sort of manufacturing hub sort of really emerge in India, because that will really allow for a lot more investments to come. Are we there today already where we are seeing hundreds of investable companies on the manufacturing side? The answer is no, we're not there today.
But that aside, consumption as a space as well, you all have some investments within this space with TCNS Clothing, which is a listed company. Just walk us through whether or not you're expecting, some sort of inflationary concerns to maybe play spoil sport to this space, and what is it that you're looking at before identifying the appropriate companies within this space?
So what we love about consumer obviously is the fact that these businesses are fantastic businesses. They generate, they're sticky, they're retail, they're B2C businesses. Gross margins are very high. I think the challenge, of course, is growth has been patchy historically. We've not seen runaway growth in consumer relative to, let's say, manufacturing, or clearly relative to IT or even pharma, and certainly relative to new economy. So growth has been somewhat muted. Inflation has been a concern. I think the single biggest challenge, frankly, has been overexcitement and valuations, which is why we've, not been in a place to actually deploy a large portion of the fund into consumer. We've always done and made investments, but they're not, as large as what IT or pharma has been for us, because we've struggled on, coming to terms with the valuations. That being said, I think, where we are seeing today, there has been a correction in valuations in this space for a while, and the time correction that I talked.
That the new finance bill amendments and the indexation benefits for debt mutual fund now will no longer be available from 1st of April 2023 onwards.